Good morning and happy Tuesday. Welcome back to the Daily Grind. I'm your host, Chump Change. This is live and recorded. For those of you that might be new here, we typically do is go over crypto news or news in general in the space. I update myself, bring you guys along for the ride. Let's see who's here in the house, and then we'll get into this. Mr. Crypto Frank, what's up, dude? Steven Cicero, good to see you. We got Daddy Chill, Offshore Miner. Let's see, Vinny, Nick K, what's up, man? Good to see you. Andrew Masad, Chris Hanley. Let me scroll through this a little bit. Dom G, what's up, man? Son of a rabbit, good to see you. Nick K, my man. Let's see, Cape Cod Crypto, I need my BTC. I love you changed your name from I need my cod. Perfect. All right, let's get into this, see what the market's looking like today. Bitcoin 62,430 bucks. We got Ethereum at 2623. I don't know why I just got a hiccup on that. Solana got 153 bucks. Everything's red. What is happening? Why does it all look red? We are at the beginning of a massive super cycle. That's what a lot of people are saying, and that's honestly what I think is going to happen when the election gets closer. We're going to see things completely explode. There's just not a lot of trust in the government right now, so we're gonna have to see what happens. XRP at 58 cents. We got Near Protocol at $4.69. We get LTC at 62 bucks. That's a steal purchase right there. We got Caspa at 16.7. I think that's a good time to buy Caspa as well. Let's see what else we got. Link is down actually a bit today, 5.43% to $11.62. TRX is down to 16 cents. ADA is at 36 cents. That's actually a decent time to buy as well. I was getting some at 30 actually the other day. Not too bad. Did any of you guys see the Lithium hash rate spike? We're going to talk about that shortly. But it's not a top 100 coin, so we're not going to see it right here. All right, crypto bubbles. Let's see. What do we got on the day? The biggest loser. Which one is it? Looks to be Whiff. Whiff, biggest loser in the top 100 coins to $1.67, ranked 50th. I'm still shocked this has a $1.67 billion market cap. It's crazy for a freaking meme coin. I don't know. What do you guys think? You think it's gonna come back or what? Let me know. Popcat 9.9% down on the day, 94th out of the top 100 to 67 cents. We got the Akash network is one of the only things that are in the green, 8% today up. We have $2.86 for that. HNT's up 3.2% to $6.75. Then we got Maker over here up 2% to $2,141. Interesting. What's this one? This little guy over here. Eunice said Leo. What is this? What is this? Ranked 17th, $5.41 billion market cap. What the hell is this coin? What? $5.85. I've never heard of that coin. Interesting. If anybody knows what that is, please let me know in the chat. If you have any questions, please feel free to just at me in the chat. Leo Lustig, what's up, dude? Fast token over here is actually up a little bit today. Doesn't even tell you how much it's up. It's $2.51. I can barely see it. Can't even tell. All right, Frax, what's this one? Over here, this is up a little bit today, 1.5% to almost $1. Ranked 97th. Interesting. Nothing else really jumping out at me though. Everything's kind of just floating sideways, getting things straight. All right, flashbang. Here we go. Fear and Greed Index is at a 48 over here. It's neutral now. We were greedy yesterday, but now we're back in neutral. Honestly, this is what we want. We want a needle teetering in the middle. That's what we want. My opinion, it's the best time to buy as it's coming up, right? All right, we got top 10 coins over here by coin market, over on CoinGecko by coin market cap rather. We got Bitcoin, Ethereum, Tether, BNB, Solana, USDC, XRP, Lado Staked Ether, Dogecoin, and Tron in 10th place. Look at this, Toncoin jumped up to 11th place, kicking Cardano down to 12th. Crazy. Absolutely crazy. $12.9 billion market cap for Cardano. Tron in top 10 is a 13.9, so it's about $1 billion more than Cardano. Excuse me, that's crazy, man. Toncoin's been getting some serious push lately, huh? Honestly, I think it's just because people are being rebellious from that guy getting arrested. He doesn't want to hinder his platform to like censor people in their free speech, right? So they're trying to throw all these narratives at him or at the platform itself, saying like, you know, he's just this bad guy allowing all this criminal activity to I guess be brought forth on his platform, which is total bullshit. It's so stupid. We're gonna hear a little bit about that in a bit. This is that Leo token. It's crazy. No idea what this is. $5.85. When did this come out? 2019. 2019. The hell is this? I don't know how I've never noticed this before. It's down 28% over the past 2 years. $8.14. I have zero idea what this is. If anybody knows, let me know. Let's see. Good morning, Mr. Kyle Rosa and Scott Sheffield. What's up, dude? Nismo Miner, good to see you as well. All right, Ethereum Classic over here, 19 bucks. I think Ethereum Classic, man, I really hope this coin pops off for the sake of mining, because we all have these, you know, jazz miners or just little iPolos, or just ETC in general has always been that secondary coin that we went to, you know, when Ethereum just kind of went away. It was always like Ethereum Classic. That's what we went to, right? This is technically the main chain of Ethereum, and it just carried tried and true, and hopefully it comes back. I want the price to appreciate. We're gonna have to see, but $167 is 88% down over the past 3 years. I think we're gonna have a nice climb up in the bull run, but we're gonna have to see, right? This is cheap right now, though. It's cheap, 19 bucks. It's really not bad at all. All right, moving on to the mining segment of things. I want to get into talking about this whole thing, because you haven't seen the Bitmain Antminer AL1 Pro, 16.6 terahashes. This thing is mining lithium. We are down to $202 a day. All right, back when these were released, actually this one was over $1,000. This, the 15.6, is now at 189 bucks. So when these first things were released, these were making $1,000 a day or $1,100 a day, and I said it would be looking about a fifth of that. Yesterday we had on Antpool, let me see, Antpool, which is Bitmain's pool, shot up 2 petahashes. Oh my god, almost 3. I mean, they're over 3 now, but damn, 2.5 petahashes this thing jumped. I don't know if you guys can see that. Actually, look at this, 2.5 petahashes this thing jumped. Clearly they're doing a burn-in test on these units, and that is a lot of hash rate to come on the network all at once. A lot. And you think that's all of them? Absolutely not. This is only going to get worse. It's got me very fearful for lithium. I am hoping that they artificially pump the price at least a little bit. So for the sake of everybody that just got the machines right now, that's just my opinion, or a lithium can actually hold its own price. Let's see, Mr. Crypto KJ, dude, you don't have to do that. I appreciate you sitting here just daily. Better than the S19K profits. You're welcome. Thank you. We'll get to that in a second. Jeez. All right, looking over here, we got the Bitmain Antminer KS5 Pro, 21 terahashes over here, making $23.20 a day. Actually, terahashes, is it .com? It is .com. Thank you for making DJ scream. Appreciate you, Mr. Crypto KJ. I saw a tweet. I don't have Twitter. I'm not logged into Twitter on this, but KS5L, which one was it? You know what? I'm gonna have to look now. God damn it. Give me a second. I hate Twitter. I hate trying to navigate it. Terra. See if I can find it. All right, let's see. Terra, a man, Mr. Hawk Crypto, I think he posted. Yeah, here we go. This is what I wanted to show you. The ice server KS5L, that's the one it was. 12 terahash unit, $24.50. Crazy. These prices are freaking falling drastically. Insane. That's the KS5L. That one is making, let's see, KS5L is now making $9.42 a day. This is the 12 terahash unit on Caspa. Caspa's been getting the emissions have been killing this thing, right? But if we get an appreciation of price, then hey, this thing could explode still, right? And that's not a bad it's not a bad price, but right now I think I would just buy the coin. I'm gonna be real. I don't think I would buy any miners. Actually, I know I wouldn't buy any miners. For me, that's just my personal opinion. You know, the person that buys the coin versus the person that buys the machine, there's always two sides to every story, right? if the machine or the price appreciation isn't there, or you can't get your money back before the bull run, right? It's you kind of screwed with the machine, right? But then again, if you can make more back with the machine long term, it's, you know what I mean, it's one of those things. You gotta weigh out what's best for your situation. If you can afford to throw away the money and not worry about it, then that's what you should do. But I don't know, me, I'm just buying the coin personally. KS5 Pro 21 terahash unit over here making 2320 a day. We get the KS5 20 terahash unit making 2210 a day. We get the Antminer L9 over here, 16 gigahashes, mining Dogecoin and Litecoin. That's merge mining. We have $17.11 a day. This thing, I believe, will be mining, or have the option to mine bells as well. The whole triple mining thing that's just going on now. The Ice River KS5M, 15 terahashes, making 1381 a day. It's still not that bad, to be honest. Like, it's a normal miner, right? Even though they were making a shit ton before, 13 bucks a day off a miner is really not too bad. It's just, it's gonna get worse. It's gonna get worse. Only gonna get worse. Let's see. Casper needs to pull their finger out and get get the KRC20 going, so rewards are better. Yeah, that's a good point too. That's a good point too. I don't know enough about what's going on over there though, so I haven't been paying attention. I've been like disconnected for about 2 weeks. Gold Shell AL Box 2 Plus over here. This thing, 1 terahashes, 480 watts. Wait, what? Oh, this is the new one. This is the new one they just released. What in the hell? Man, they're releasing these units too fast. That's crazy. All right, 1 terahash unit, 480 watts, $11.56 a day. How much is that thing going for? Does anybody know? If anybody has the price, just put it in the chat. I'm assuming it's not worth buying. It's got the PSU included, but it is actually more. It's more hash rate. So that's, yeah, I didn't know it was more hash rate. Interesting. The Gold Shell AL Box 2. I got this thing in the solar trailer. The profits on this have been going down drastically every single day. But 720 gigahashes at 360 watts. So I mean, I guess this one might be more efficient. Seems a bit more efficient, but that thing's making $8.29 a day at this current moment. It was making like 30 or 40 bucks a day like a week and a half ago. Jingle Mining has it for $2,200, maybe a holding price. Are you serious? For this thing? For the AL Box 2 Plus? What? That's gross. It's not as bad as this was though. This was 27 something when I got it like a week and a half ago. That's crazy. Man, this whole thing's crazy. Like, just these companies, man, they just want to make so much money, and it's like, ugh, I don't know. Anyways, Bitmain, we got the L7. You guys know I got this 9050 down at Terra Hosting. Shout out to them. If you're interested in hosting, go check out the links in the description. 3,425 watts for this thing. Merge mining Litecoin and Doge. $6 a day, $6.02 to be exact. You know what, I need to look into that bells thing today, actually, if I have some time. I've just been friggin' crazy busy. Let me see. Crypto KJ, thank you for popping that up. Let's see. This is the AL Box 2 Plus. Yeah, it's got the PSU integrated. It looks just like the Doge 3 Plus. Interesting. Yeah, man, I don't know. You know, let's see, where is this? Let's see. I'll show you guys. Oh, damn it. It's not saved on here. Shit. I don't know my lithium address, or I'd show you what I was mining. So I have my AL0 and the, what's it called? The AL Box 2 on the same pool, and I'm getting a little over 1 terahashes, 1.1 to be exact, I believe. And it's, yeah, it's about 12 bucks a day. It was down to like 9 bucks a day. I don't know. It's bouncing all over the place. The Doge 3 Plus over here, this thing, I got this in the solar trailer as well. This thing's only making 7 cents a day. This is a 10 cents per kilowatt hour. That is miserable, absolutely miserable, dude. The KS0 Pro, oh my god, this thing's only making 5 cents a day. Bruh, stop the cap. That's terrible, but it's still more profitable than the KS2, I guess, because of the electricity. That's insane. Holy shit. Wow. KS1 over here, 2 cents a day, dude. Oh. All right, just gonna give up mining. We're gonna give up mining today. We're gonna go over to GPUs and see what GPUs look like, and then we're gonna get into some new stuff. Looking like, let me refresh this. I don't think I refreshed it yet, did I? All right, RTX 4090, nice hash Pyron. Dude, there's some drama going on with Pyron too, huh? Didn't they fat finger the block rewards or something? Everybody got paid out more. That's crazy. That's so funny, and it sucks for them at the same time. Let's see, Ironfish and nice hash Pyron hash. Interesting. Is the top of the charts with 4090. We got the 170HX Zealous and Ergo. How's Ergo doing? Let's see. Ergo 76 cents. I mean, I guess it's up a little bit from a month ago. It's going down the 7-day. Interesting. Very interesting. I don't know. Is anybody holding Ergo? Let me know. Actually, you know what? This thing, so this coin was once almost 20 bucks. 1872. It's down 95%. I don't know. I don't see it for Ergo. I don't see it being a thing, but I don't know. Certain people think it's a good hold. I disagree. We have the 4080 Super over here. Nice hash Pyron hash. We got Ironfish again, same thing. Ergo on the top of the charts there as well. The yield must be pretty good for Ergo right now. That's probably why. The 4070 Ti Flux is there. Interesting for the revenue. Let's see, the 6800 XT Raven coin and Chlor. Interesting. How's Raven doing? Actually, I haven't looked at Raven in a long time. Sold out of it when it was like a couple cents. I think it was like 2 or 3. Was it 2 or 3? I don't even remember. Actually, it was a couple months ago. Yeah, it was almost 3 cents when I sold out. I think it was 3 cents. Pretty positive. It was about 3 cents when I sold out. Interesting. Yeah, so that's down. I mean, hey, I could buy back in for a double the bag, I guess, right? If I just put the same amount of money in. Interesting. What was the other one? Oh, Chlor. I want to see Chlor. I looked at Chlor yesterday, though. How's Dynex doing, too? I haven't really looked at Dynex in a while. 5-6 cents almost. Chlor's kind of all over the place, under 6 cents. They do have an actual AI platform, so that's kind of neat. I want to see what's going on with them. Let's go to Dynex. Dynex up 0.77%, 38 cents. Man, Dynex been taking a freaking shit lately. Man, I hope this coin appreciates, because I like what they do, dude. It's like if they could come back and hold up over $1.39, 72% down right now. And if they could get like a good wallet, I know OneKey has one actually now. But man, I really wish they could get on Tangent. But 38 cents, I think that's kind of a steal for Dynex. It's pretty good actually. It's pretty cheap. Let's see, we have nothing really jumping out at me. Who wants to mine Raven though and Chlor? You guys are crazy if you're mining that shit. That's my opinion. But I mean, I guess the most profitable for these cards. It's just I can't, dude. Kapow is like so freaking high on energy. I guess the AMD cards are pretty good at it though. Xano, the A2000, interesting. Does anybody ever mine Xano? Let me see. That's one of those projects I've never looked into. I don't know. $5.35. Let's see. Can you get bells and Bugna added to unmineable as a payout option? I could ask. I doubt it though. I doubt it. 3 months. $2. Damn, this thing's taking a freaking run up, huh? What's going on with this coin? It's all-time high. About 23 hours ago. Oh, it just hit an all-time high. Look at that. Yesterday. Oh, snap. What is this coin though? I need to know what it does. There we go. Technology innovation ecosystem. Privacy pioneers, a showcase of diverse projects and featured harnessing Xano's capabilities. What the hell? The scroll wheel goes sideways? Dude, that's weird as shit. I have never had a website do that. Oh, what the hell? It scrolls sideways for half the page and then it goes down. It's so weird. Push the frontiers of digital privacy. Join the Xano ecosystem today. Ring signatures. I'm gonna have to look into this. I don't know anything about this project. Not a freaking thing. Does anybody know anything about this? Has anybody actually been holding this coin? Let me know. Interesting. I'll have to check this out a little later. Don't have time to do it now. All right, let's yeah guys, if you're just joining, man, Elysium, Lithium's getting the burn test done right now on those big machines. We got 2.82 petahashes over here on Ant Pool, which is Bitmain's pool. So clearly they're doing the burn tests on their brand new units. And this thing, what are the odds? What do you guys think? How high are we gonna get? How high are we gonna get within the next month on this network hash rate? What do you guys think? Because, well, actually, you know, the overall hash rate right now is 6 petahashes. Okay, I think we're easily gonna get to 10 easily, real soon. That's my opinion. But a lot of people aren't just using Ampool, right? They're like, this is just Bitmain. This is my opinion. I mean, I'm sure some people are using it, but like, I'm on hero miners for a lot of my stuff. I don't know where you guys are or what you guys choose to mine to with your lithium, but let me know in the chat what pool you guys actually choose. All right, moving on. Let's do the news. We have a lot of things I want to watch today. The Dow closes at record highs. Why? The market's biggest bull sees a volatility comeback. Let's see what they got to say over here on CNBC television about an hour ago. Let's do it.
For more on what NVIDIA earnings mean to the broader market, let's bring in Julian Emanuel, Senior Managing Director at Evercore ISI. He has a 6,000 price target on the S&P 500, which implies a 7% gain from today's close. It's one of the highest on the street. Julian, welcome. Good to have you with us. Why are you so happy?
Look, the way expensive markets end, and this is an expensive market, and we all know it is, and it's been that way for the majority of the year, is one of two things. Number one, you see an extraordinary amount of speculative froth. We've seen it before. We saw meme stocks go back to 2000, the tech bubble, et cetera. Lots of activity, lots of, very bullish sentiment. We're not seeing that at all, okay? And on the other hand, the other thing that ends it is if we see concrete signs of recession. And yes, the economy is slowing, but the concrete signs of recession aren't there. We were just told on Friday that the soft landing looks pretty darn good, and that, in fact, if the labor market weakens, we're going to be,
The third thing that's not good is rising interest rates, and we've got the opposite of that in all likelihood.
Exactly. The Fed has been prepared. It is prepared, and they are sort of the engineers. We've gone from the pandemic inflation adjustment directive to being the engineers of the soft landing.
All right, maybe it's not concrete, but it's close. Some rule definitely triggered last jobs report without question. I think of people coming around that now. And the re-steepening of the yield curve historically suggests we're at the beginning of a slowdown, not towards the end.
Agree with all of those. And I think we'd also all agree that some of the things that we've seen that traditionally we can point to, and I don't think it's any coincidence that Sam herself has been trying to talk people out of the efficacy of the rules she created. The inversion of the yield curve going on a year and a half now. Normally, the recession would have started months ago. It's not to say that it's not going to happen. In fact, we think it could be a 2025 thing. But again, when you're thinking about how the market is right now and where stocks are going, the ingredients for either the blow-off or, the turn down because of weakness, they're just not there yet.
Do you think that, was there anything in Friday, whether it was really kind of getting to, hey, we're going to support the labor market now, was there anything that changed your view on Friday to become more bullish? And we were talking recently about the weaker dollar. Layer that into your bullish outlook, because that can be certainly very bullish for certain sectors.
So the weaker dollar, as you know, long historical tendency of being good for markets and good for risk assets. That's obviously been the case in recent weeks. But I would also say this is just sort of a word of caution, particularly since it's September. We don't want to come back from the beach. We don't want to go back to school. Stocks go down in September quite often, is that the dollar has been going down in a straight line. At the same time, the S&P 500 has been going up in a straight line since August. Look, long term, those are very good messages. Maybe you want to be just a little bit cognizant of risk in the very short term, though.
Court?
And I'm curious what your position is in small caps, which I think you are constructive there. And I'm curious if you can talk to that, 'cause I think people are pretty divided of if that can last. And also, we were talking about China earlier, and those small caps have less exposure to China, the Chinese consumer. Wondering if that plays into your decision there at all.
It's a domestic-focused story, and always has been. And if you look back to Friday, the message from Jay Powell was soft landing, and small caps love a soft landing. And frankly, what we saw in July, the incredible, very historic outperformance of small caps over the S&P 500, over the NASDAQ, our quant work says 12 months forward, small caps always outperform when you see that kind of explosion.
You haven't mentioned it, and I'm struck by how seldom it seems to be mentioned in commentary, and that is the election. Does it matter?
Oh, yeah. It definitely matters. There's no question about it. And in fact, when you look at it in years where the balance of power in Congress in particular is this tight, you get volatility. So frankly, when you think about it, the first 6 months of this year where there was very low volatility, welcome to the second half of the year. What we've seen in July and August, we're likely to see the rest of the year, both to the upside and the downside. It definitely matters.
Interesting. All right, let's real quick. I have to put this one on. Oh man, I opened Discord. My computer's getting all nutty on me. All right, let's see. Crypto KJ said I missed this clip yesterday, so we have to watch
The
this.
Harris campaign has yet.
Oh god. Oh god. All right, let's see. It says Senator Warren on Harris price gouging plan. Oh shit. And Joe's on it, so we know it's gonna be good. Let's dive into this one and see what happens here. This is gonna be good.
The Harris campaign has yet to give specifics on the vice president's plan to ban price gouging or actually put on some price controls, basically. But our next guest worked with Harris on an anti-price gouging bill in 2020 during the pandemic. A similar bill was reintroduced in the Senate earlier this year. Joining us now, Massachusetts Democratic Senator Elizabeth Warren. Senator, you're famous from last night. Oh, you're already famous, but you're even more famous from last night. Kind of a pretty nice moment for you, I have to say.
Well, it was a moment for me about democracy. Why all these people had shown up because they want to be in the fight. And they want to be in the fight because they want to see an America where they can afford to pay for their prescription drugs. They want to see an America where their kids can afford to go to college without getting crushed by student loan debt. They want to see an America where we're going to strengthen Social Security, not, as Donald Trump did, propose 4 budgets in a row that cut it. So I saw this as a room full of volunteers who are in the fight all the way.
Senator,
I
actually wish Donald Trump would consider doing something to entitlements or stuff, but I don't think that's really the case. Senator, the price gouging.
You know, but here's
He said Trump, and to her face, she was about to throw up immediately.
let's remember he did try 4 times in a row.
I wish he would to actually, maybe move it out to 70 or 75, because something's got to be done, because it's going to be untenable the way it is. Look at the Washington Post, and if you lose the Washington Post as a Democrat, you got some serious problems. This is what they said about the price gouging or the price control legislation. It was really pilloried from both sides of the aisle. Even Jason Furman, I don't know if you saw some of his comments. He said it's not good policy, and it could actually do more harm than good. And I can paint you a picture of how that would work and how it's worked in the past, where we've tried to artificially hold prices down. Competition doesn't come in. People don't, like, if beef is too high, people don't move the chicken. The competitors don't come in to undercut where the beef prices are. Nothing works when you try to artificially control prices. It's just a supply and demand issue. It's a flawed idea.
So did you have a question here?
Yes. Why would you propose a flawed idea when the real problem,
if
you really want to help the middle class, if you really sincerely want to help people having trouble at the grocery store, it's not price gouging that's the issue. And if you look at it seriously and really want to help them, then let's do something about it together. Fine.
I understand if you want to do a lecture about this, but let's just start with, where have you been for the last 30 years as 36 states have price gouging laws, and they have used them effectively. States like Texas and Florida, they've used price gouging laws. Price gouging laws are not price control. Price gouging laws are to say, sometimes markets go off the rails. And when they do, we need some ways to get them back on the rails. We need some curbs on that behavior.
Stop the cap.
So, for example, we watched in the pandemic how prices went up for a whole lot of reasons. They went up partly because we had supply chain kinks, we had problems because of the war in Ukraine that cut supplies of certain commodities. And one of the things that happened as a result of that is there were corporations that said, whoa, now that we have inflation, now that prices are up overall, this is a great opportunity for us to raise prices, not just in passing along costs, but to go way, way, way above that. And how do we know that it was way, way above just passing along costs? Look at what happened to their profit margins. If they'd just been passing along costs, profit margins would have stayed about the same. But for some industries, some companies, profit margins shot up. And do you know where they shot up most often? It was in companies or in industries where there was a lot of concentration, a lot of market power, places where the market is not functioning competitively. So you end up with someone, you remember we all talked about egg prices. You end up with something like this giant egg producer, Cal Maine. and Cal-Maine raises the price of eggs, their profit margins increase by 718%. That's not just passing along costs.
Senator,
and that is a time
that's sophistry. Your example on Kraft. Your example on Kraft is even worse.
You finished first. In any of the states around the country that already have price gouging laws in place.
Can I tell you why that those are fallacious and misleading at best? And the Kraft, your Kraft analogy is even. Why can't I tell you? Please let me tell you. Kraft, you say, was 440% profit increase. The example you used, the prior quarter from the year before, they had a charge of $1.3 billion, an accounting change which wiped out profits. Then they earned what they normally. Let me finish now. They earned.
You didn't let me finish. Look at the data. Come on. We have economic study now after economic study.
This is the way it always goes.
When there is more concentration,
40 million eggs were destroyed because of avian flu.
When there is more concentration in an industry, we have seen much greater increases in
Do you attribute the inflation?
Margins.
That's what you think we need to do to solve it?
They're not random. They are not random one-offs. It is part of the problem. When you've got companies that are gouging consumers on prices, consumers need to know they've got somebody on their side.
Senator, listen, we're trying to help. We're trying to actually do.
Where are you in the 37 states that currently have price gouging laws?
Just quickly on that point, Senator Warren, this is Kelly here. Can I just clarify how this would work?
This is a way you never lose an argument because no one can ever say anything back to you, Senator.
Oh, shit. Oh, that's great.
Gouging laws they look at when a state of emergency is declared, and they, for the most part, say if your prices go up 10 or 15% compared to before that state of emergency, you have to pay a fine. So on a national level, how exactly would this work? Would you define the state of emergency? Does it have to be declared on a national level? Are you then talking about a 10 or 15% increase in prices versus prior to that declaration, and then companies have to pay a fine? Okay, fine. Maybe that applies in 1% of the situations. But this legislation, which is still vague, is making it sound like something on the scale of broad price controls would be imposed, broadly speaking. So which of the two systems is it?
So it is not price controls. This is about when the market itself is not functioning. Sometimes markets don't function because there's been a localized emergency, a hurricane, a wildfire,
hurricane,
flooding. And so in states that have these price gouging laws, they can come in and say, look, you can do some price increases. But if you're going above a certain level, you have to be able to justify it. You have to show that what you're doing is passing along costs.
Would it be company by
company? Reasonable thing to do.
Oh, that wasn't even the whole thing. They kept going. Oh, that was great. Crypto KJ, thank you for bringing that up. But goddamn, did Joe gave it to her. Oh my god. But he wasn't wrong. That's why they can't. You can never have a good conversation because they just continue to talk, and yeah, you can't win against them because they don't stop. All right, Telegram linked crypto token plunges after CEO is arrested in France. Let's see what they got to say over here on CNBC Crypto World. Let's do it.
Today, Bitcoin and Ether are in the red to kick off the week. A federal court rejects Kraken's motion to dismiss an SEC lawsuit against the crypto exchange.
Oh, wow.
And Senator Cynthia Lummis sits down with us at the Wyoming Blockchain Symposium, where she discussed the latest on her proposal to build a U.S. strategic Bitcoin reserve.
Oh, damn. Oh, damn. There's some interesting stuff today. Yeah.
Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Cryptocurrencies are headed lower this morning. By noon Eastern, Bitcoin dropped a little less than 1% and was trading at 63,545. Ether fell by 1.5% to 27.22, and Solana slipped a little more than 1% to 157.70. But that only tells part of the story. If we look at Bitcoin's performance since our last episode on Friday, that cryptocurrency is actually up 3.25%, while Ether's up nearly 2% in that time.
Perfect.
Okay, let's talk about the top stories. A federal court rejected Kraken's motion to dismiss an SEC lawsuit against the crypto exchange. That's according to this court filing from Friday, which says that the defendants have 20 days to answer the complaint. The SEC charged Kraken back in November with allegedly operating as an unregistered securities exchange, broker, dealer, and clearing agency. Friday's court filing says that Kraken does not deny it never registered with the SEC, but says that it does not need to because the transactions that it enables on its platform do not involve securities and therefore do not fall within the SEC's regulatory purview. The filing goes on to say that, quote, the SEC has plausibly alleged that at least some of the cryptocurrency transactions that Kraken facilitates on its network constitute investment contracts and therefore securities and are accordingly subject to securities laws, and that the motion is denied. Now, despite the denial of Kraken's motion, the firm's chief legal officer called the court ruling on Friday a win. In a series of posts on X, Marco Santori wrote on Friday that the court ruled that none of the tokens trading on Kraken are themselves securities, which is a significant win for the crypto exchange and crypto users everywhere. He went on to say that the ruling confirms that the SEC cannot credibly regulate crypto by enforcement. We reached out to the SEC regarding Friday's development, but didn't hear back right away. Next, Telegram, which is popular with crypto users, says that it's abiding by EU laws, including the Digital Services Act, following the arrest of the messaging app CEO Pavel Durov in France over the weekend. The company posted on X yesterday that Durov has nothing to hide and that, quote, it is absurd to claim that a platform or its owner are responsible for abuse of that platform. The president of France, Emmanuel Macron, took to X to clarify that the arrest was not a political decision, but rather as part of a judicial investigation. Today,
bullshit.
The Secretary General of a French federal agency that combats violence against minors wrote on LinkedIn that at the heart of this issue is the lack of the platform's
Wait. What did they? I gotta hear that again. I'm sorry.
Decision, but rather as part of a judicial investigation. Today, the Secretary General of a French federal agency that combats violence against minors wrote on LinkedIn.
Combats violence against minors?
Stop the cap.
The fuck?
That at the heart of this issue is the lack of the platform's cooperation in the fight against pedophilia. Telegram-linked Toncoin plunged following reports of Durov's detention, and as of noon Eastern, it's trading at $5.63, according to data from CoinMarketCap.
What? Why is that always like the thing? Why do they always try to just drag people through the mud like that? What the fuck does that have to do with it? What? I'm so lost.
At noon Saturday, prior to reports of Durov's detention, it was trading at around $6.84. Okay, so we all know that in recent months, Donald Trump has shifted his crypto stance, switching from skeptic to advocate.
Yeah, they were actually talking about minors, not minors. All right. So what is... Like, what? I'm so lost.
And the move involved the work of a small army of Bitcoiners and other crypto advocates who were able to make their way into the candidate's inner circle. In particular, 3 friends in Puerto Rico came together to try and convince the Republican presidential hopeful of Bitcoin's value and to eventually make that position known to a key audience at Bitcoin 2024 in Nashville. Now, in Bitcoin speak, Trump was orange-pilled. That's a play on the phrase red pill from the movie The Matrix, where the main character is given a choice of taking a red pill, which offers access to the unsettling truth about the world, or a blue pill, which signifies a false but far more comforting version of reality. Orange pill refers to Bitcoin's official color and represents one's dedication to the cryptocurrency over fiat currencies. Now, within the group of confidants, friends, family members, and colleagues united in their mission to orange pill Trump were the trio of Puerto Rico residents, which include a former California prosecutor and the organizer of the Bitcoin conference in Nashville. The trio spent months secretly teaching Trump about Bitcoin, and the former president's recent pro-crypto stance has led to a surge in endorsements and donations from big names in the industry, including the Winklevoss twins. Meantime, Democrats are trying to show that they can find common ground with the crypto industry despite the tension that has surfaced in recent years from the Biden-Harris administration and the heavy regulatory hand of SEC Chair Gensler. In fact, last week, Harris's campaign advisor reportedly said that the Democratic nominee would take a more supportive stance on emerging tech like crypto. All right, sticking with politics for our main story. Crypto World's Tanea McKeel sat down with Wyoming Senator Cynthia Lummis last week at the Blockchain Symposium in the Cowboy State, where the two discussed the latest on her recently announced bill to build a strategic Bitcoin reserve. She also weighs in on Washington's progress to pass crypto regulation.
Senator Lummis, it is lovely to see you again. Thank you so much for joining us in this beautiful setting here in your home state. The last time we spoke, you were just revealing your proposal for a strategic Bitcoin reserve, and I think hoping for a substantive sort of feedback period here between now and the end of the year. How's that going?
Well, it's going really well. We had proposed that we use our gold certificates, mark them to market, sell them for US dollars, invest US dollars in Bitcoin, store it untouched for 20 years, and 1 million Bitcoin would reduce our current debt in half. So it is a play to back the US dollar. It's also a play to make sure that our debt is being retired and having a strategy for it. So I continue to visit with members of the Senate about that concept. We know this is something that's not ready for 2024 primetime legislation, but it will be in 2025.
Is there any good feedback you've gotten, constructive or otherwise, that has been eye-opening to you?
I haven't seen any feedback that leads me to believe that we're not on the right track. The feedback I've gotten so far is what we usually hear about digital assets, that they're volatile and that this is not the kind of volatile asset that can underpin the US dollar. What people aren't seeing is how much less volatility there is now than there was at the beginning of Bitcoin in 2009, and how volatility as the asset grows will continue to be reduced. So it's just an exercise in getting feedback from people about what makes them uncomfortable and then trying to address their questions. Usually their questions are based on, a lack of in-depth study of Bitcoin. And I can see why people are reluctant to take that deep dive, just because you really have to spend some time at it. And people who are busy with all kinds of policy issues find it hard to find the time to study an asset that's unfamiliar to them. But they will, because they have to. The entire world's going to be digital. And we have to lead in this area. Right now, we're not leading. And that's just not where the United States needs to be.
It's an interesting point you make about volatility, because that is such an inherent quality of Bitcoin, and you still do see a bunch of that volatility. But you're right, if you look back 10 or more years, it does slowly become more and more reduced. Volatility in August is typically not there. It's usually a sleepy month, but we have had some volatility in recent weeks, and the election has become kind of a theme for the crypto markets here. So I want to pivot a little bit. Senator Schumer made kind of a splash, I think it was a couple weeks ago now, where he said on the Crypto for Harris call that he was pushing to get crypto legislation passed, and said that he thought it could be done by the end of this year. What would make that something that you could put your support behind?
Well, I'm very encouraged by those remarks. We know there's legislation in the Senate Ag Committee, because the commodities portion of digital assets, which really is Bitcoin and Ethereum for now, are under the jurisdiction of the Senate Ag Committee, because the Commodity Futures Trading Commission falls under their jurisdiction. And so there is a bill that can prove to be the vehicle to kickstart the Senate's debate on digital asset regulation. So the fact that Senator Schumer, who is in the very best position to move this forward and use his clout as the Senate leader to do so, it just makes me encouraged.
There have been two key themes on legislation. So, there's market infrastructure and there's stablecoins. Is there one or the other that you see having a better chance of getting through first? Maybe not necessarily this year, but the first one?
Well, once a bill gets out of the Senate Ag Committee and goes to the floor, then all kinds of amendments can be added. So the way I envision it happening, if Senator Schumer chooses to exercise his leadership and his position to move it forward, is that a bill that is CFTC based comes out of the Ag Committee to the Senate floor, at which point the SEC portion could be added, the stablecoin portion could be added, and it could become a larger financial services type of bill. So if it happens, that's how I see it happening.
We know you've been very supportive of the Bitcoin industry, and you've put your name behind some stablecoin legislation. Crypto, of course, goes beyond Bitcoin, and symbolically, it's one of the things that makes it fun to be at this conference here in the state, which historically has pushed the boundaries of financial innovation. We're talking so much at this event about the future of crypto and digital assets. What are some key themes that are of interest to you? What do you see as sort of the next big thing to tackle in the crypto space?
Well, I'm learning a lot more now about utility tokens, the notion that something could be on the blockchain that establishes property rights and how that can benefit all kinds of businesses. The applications are almost limitless. And so it is the component of digital assets that really is more a store of property rights as a Bitcoin, as a blockchain ledger that I'm learning more about and trying to appreciate and understand where regulation is not necessary and where we should let this industry run and innovate and grow, or where matters like data privacy need to be protected in that process. So I'm learning a lot about that component of the cryptocurrency world.
Interesting. Well, I missed every bit of that, so I apologize. Anyways, kids having a meltdown up there, so if I have to disappear again, that's why. But I'm going to bump this up. We're going to listen to Anthony Pompliano's podcast right here. Government just erased 1 million jobs. Let's see what he's got to say over here on his channel. If you guys aren't subbed to him, go check him out. Links in the description. Let's do it.
Analysts at Goldman Sachs are predicting that the government may have overstated up to 1 million jobs in the last year. And that's had a lot of people saying that the government may have been misleading or just misinterpreting or just incompetent as far as their job counting. What do you make of this?
So to be clear, there's a lot of incompetent people in the government. There's also a lot of complexity in doing economic data. And so just because there are incompetent people or there are bureaucratic people, it does not always mean that they are being malicious or nefarious in some of the economic data. I think that the job revisions is a situation where it's just really hard to count how many jobs are getting created, how many jobs are getting lost, and keeping track of 330 million people and what are they all doing. So with that said, it is absurd. Insane that Goldman Sachs believes 1 million jobs. And to make this, crystal clear for people, there was about 1 million jobs gained last year. Now, Goldman Sachs believes that there's going to be this revision. It's kind of like if you took the test and you got a second chance to go back and change your answer, and they are going to revise that number down by 1 million, which means that for a year, the government was telling us job gains, job gains, job gains. Look at all the jobs that we're creating. And now if this revision ends up being accurate, that means that they're going to say, oh, by the way, there was no job gained in the last year. And so the reason why that becomes a huge problem is because we probably thought, based on the economic data, that the economy was stronger than it actually is. Now, why is that important? Well, the Federal Reserve is making monetary policy decisions based on this data. And so if they thought it was stronger, maybe they should have already been cutting interest rates. So there's the potential that they're behind the curve because they were getting bad data. And then on top of that, how many other people were making decisions in their investment portfolio or elsewhere in the economy based on the economic data? And so I always go back and I try to remind people, you have to assume that the economic data is a strong data point, but you cannot put 100% faith in these numbers because there are revisions. It's really complex. The government historically has under or overcounted depending on the metric. And so what you really are looking for is much more the direction of travel than the exact, kind of specific number. And if you can look at direction of travel, really what you're looking for is the change. So if something is dropping and all of a sudden starts gaining, that's a really important data point. Much, much more important than was it 800,000 jobs gained, 1 million jobs gained, 1.1 million jobs gained, or in this case, 0.
If we do see this crazy million jobs erased, where do you stand on whether you think the Fed is on time or late with their rate cuts?
The Fed can never be on time. It is a law of the universe because structurally the Fed is reactive. So the only way that the Fed can make a decision is what the data tells them to make. And that data is backwards looking data. The data tells them what already happened. And so as you've seen, let's take the current monetary policy decisions around interest rates. The Fed refuses to cut interest rates until they have confirmation that inflation is under control. So they are not going to make an interest rate decision because we think we're close to having it under control, or we expect in the next 90 days to have it under control. They are only going to make the interest rate cut once they can confirm we have inflation under control. They only know that on a lagging basis. And so there's no ability for them to front run, for them to predict, or for them to kind of, make the decision in the same day or week. And so when you understand that the Fed's decision-making process will always be behind the curve because of the structural disadvantage and the kind of data pipeline, then what you begin to understand is why investors move their capital in advance of the Fed decision is because the investors don't want to wait for the Fed to move. They're trying to actually time in the market and be more of a real-time response. And so it's this fascinating dynamic where the Fed is naturally operating on a lagging basis. Market participants believe that there is alpha or returns that can be generated by operating in a more real-time basis. But both parties are looking at data that is likely to be inaccurate at best. And so it is really hard. And that is what makes, I think, economics so intellectually stimulating for people. It's what causes all of the debate. And ultimately, it's what makes markets, because the same cohort of people can look at one data point and come away with very different conclusions. You may go long an asset and I go short that asset, but we looked at the same data, because it's not just about the data, it's also how we interpret it. What does it mean? And so it's this amazing game. I like to say investing is the professional sport for thinkers. And so the Fed is actually playing the same game. The difference is they have no skin in the game. When the Fed is wrong, the Fed doesn't lose money. The Fed doesn't get punished. They don't get fired or lose their job. And so it's this crazy thing where they are responsible for interest rates and kind of monetary policy decisions, but there's no accountability.
So my reaction to this and to what you're saying is that I wonder if the market is going to react to this downward revision, because pretty much all year, the markets have been going up because they're betting on the Fed to cut rates. But if the Fed is maybe super behind now, or even just a little behind, more than anticipated, is that going to push asset prices even higher, because that just guarantees maybe more aggressive rate cuts?
Today's episode is brought to you by Zappo Bank. Let this sink in for a moment.
No, it's not. Don't lie to us.
No, it's this weird thing where if we were sitting here and interest rates were at zero and the Fed didn't have a lot of wiggle room, I think there's a lot of people that would say, hey, maybe we are at the top. One of the financial instruments that I find really interesting that's become quite popular is this kind of like no loss index, or these buffer bonds, as some people are calling them. And so really what these assets are doing is they allow you to get exposure to an index and you can't lose money on the downside. That's how they're designed. So if you think you're at or near an all-time high, that is likely to be the all-time high, and there's going to be a market correction, you can buy these things. You can stay somewhat exposed to, upside, but you have that downside significant protection. And so this buffer bond obviously becomes really interesting, right? There's $50 billion that float into these different assets, I think, on Wall Street. But what also becomes true is if we believe that the Fed, which has 5.5% interest rates and can cut, it's like they reloaded their gun. And so now we're sitting here and we're saying, hey, the Fed's not out of the fight. The Fed took a water break, right? They went and they got a sandwich. They took a nap. They are fresh, ready to fight. And so if there is a market downturn, or if they decide it's time, they're going to fire everything they got, which means the playbook of the second half of 2020 is coming back and asset prices will absolutely rip, because now the Fed's going to stimulate the economy. The Fed has not been stimulating the economy and we're still at or near all-time highs. Imagine what happens when they start the stimulation process.
Is your anticipation for an upswing in asset prices for stocks to mirror what's going on in crypto? Like, do you expect both to sort of correlate up?
Correlations right now have kind of equaled out a little bit. During moments of crisis, correlations are very, very high. During kind of very boring times, you get, somewhat of a non-correlated type relationship. I actually think stocks are much more important to watch based on the Fed. Like, I think stocks are more sensitive to monetary policy. Crypto, and maybe Bitcoin specifically, it definitely is sensitive to a degree. Bitcoin led the down, both the up and the down, the up of 2020, 2021, and then the down of end of 2022 when the Fed started to talk about raising interest rates. So it definitely replies to monetary policy, but there are a lot more factors that play into why would Bitcoin go up or down than just monetary policy. Whereas stocks, I think, are kind of more singularly focused on cost of capital and some of those economic conditions. And so when I see the Fed beginning to think about making moves or changing stuff, to me, stocks will actually tell us a really compelling story. And then also, most people on Wall Street are not long-term investors, Whereas in the Bitcoin world, 60+% of Bitcoin hasn't moved in a long time. So it's very long-term oriented, very illiquid type asset. Stocks tend to, kind of have people who are looking to buy and sell and hedge and kind of time markets. And so you can see a lot of capital flows changing based on these monetary policy decisions, where with Bitcoin, you might not.
I think that makes sense. Something I actually wrote about this morning, there's been fewer investors shorting big tech stocks as big tech has dominated the market more and more. So I think right now, Microsoft, Apple, Nvidia, Alphabet, and Amazon, those 5 stocks make up 29% of the S&P 500, which is insane. And the biggest 5 stocks in the early 2000s before the dot-com crash only made up 18%. And that, so that stat with the fewer investors shorting those names, that seems very bubbly to me. Like, what else could it be other than stocks going up and people are getting more and more bullish the bigger they get? What is your read on that set of data?
To a degree, you can make that argument. I think the counter argument would be these are some of the best businesses ever created in history. And if you look at just how big they are, how much cash they generate, if you look at the competitive moats that they have, if you look at the efficiency of capital in terms of what they're able to do from an R&D perspective, if you look at the growth rates, given the size that they have, these are like really, really impressive businesses. And so if you think about it from the perspective of like, these 5 companies are probably much more dominant than the best 5 companies in the dot-com bubble. They deserve a bigger percentage. Now, the question is, if it was 18%, 25 years ago, should it be 22%, 25, 29, should it be 40%? Like, what is it, right? And so I think that there is no right answer, but it feels like these businesses are amazing businesses, and that's why people are putting capital. The other thing that I think has happened is the reason why that percentage is going up is because there's a lot of stocks in the S&P 500 that are not performing. And so what you get is you're getting a bifurcation. You're getting fantastic performance from, the Mag 7, but you're actually not getting good performance from a lot of other stocks, maybe the bottom, 400, 450. And so what is occurring, obviously, is the density or the kind of ownership of the S&P 500 from those 7 stocks is, going up significantly. And people are saying, why do I only own 29% of those stocks in the S&P 500 if that's where all the return is coming from? Why don't I just put 100% of my money in those 7 stocks? And so it is this idea that people are just trying to chase returns. Now, every stock doesn't go up forever. And so the question is, how much more runway do these companies have? What I found really interesting is there's this podcast, BG2. It's 2 guys, one's a venture capitalist, one's on Wall Street, and they talk about a lot of data. And one of the things they looked at was the PE multiples of these businesses. And what they found was actually many of these, kind of top 5, top 7 businesses, their PE multiples are not necessarily higher than they were in 2021. So the euphoria, the kind of chaos of 2021 actually carried the valuations higher on, whether it's revenue multiples, PEs, et cetera, compared to now. So it doesn't mean that it's not frothy. It just means that within the last 5 years, it was frothier than it is right now, which is kind of an interesting data point because it begs the question, like, maybe investors have been exposed to such frothy environments that we don't even think there's froth right now because we're kind of like, this is nothing compared to, 3-4 years ago. And so could we be headed back to like, we have to hit those extremes again? I'm not sure, but it's possible. What do you think?
Yeah, I mean, the chart that makes me, like, it always stops me when I see it, the Mag 7 alone, if you bet on those in the last year, you would have doubled your returns than if you just bought S&P 500. And to me, it's like, it's obviously an amazing return on investment, but I can't help but hesitate because how long can that go? Like what you're saying. And the thing to me that stands out is whether this, a lot of the enthusiasm seems to be on AI and how long can that last? Because if we're watching these companies put billions and billions of dollars of investment into AI, there has to be some payoff as far as application or demand for these AI products. So I just don't know. I don't know how much more runway we'll see for this. Is there anything that gives you pause as far as, what are the biggest risks that you would be looking out for in that batch of stocks?
I think the fact we constantly hear everyone talking about, is it a bubble? Are we in a recession? Are these companies overvalued? Means that they're not overvalued. We're not in a bubble and we're not in a recession. Those things tend to happen when no one's paying attention. It's kind of the surprise factor is actually the thing that you should worry about. And if you go back to 2021, September, October, November, there are a lot of people who were like, it's going up forever. right? Like there was true euphoria. And so right now it feels a lot different than that.
I think that's why we held it all the way down. Just saying.
The other thing that I think is really important is inflation is much higher than it's been in the past, right? Even at 3%, it's 50% higher than the 2% target. But we just lived through 9% in the official numbers. And so when people look at historical valuation data, they are looking at it when people were buying stocks to buy stocks. There is some subset of buyers of equities today who are buying stocks because they want to actually benefit from inflation. They're trying to protect themselves from the inflation. So there is now a monetary premium that is being assigned to stocks. Now, is that a 1% monetary premium? Is that a 5%? I don't know. It's really hard to quantify. But the reason why that's important is you would expect that valuations should be higher with the monetary premium than without it 10, 20, 30 years ago. And so when you compare these kind of valuation data and people say like, oh, stocks right now are, 7% higher than they have been on average over the last 50 years. You're like, well, that actually may be equal because it's just the monetary premium. There's, 7% more capital going into the market trying to hide from higher inflation. And so it's just as if it was, 30 years ago valuation wise. Very hard analysis to make. And so what I think ends up being something that people need to kind of pay attention to is not externally looking at stocks and valuation data, et cetera. What is your time horizon? I constantly talk to people and I just say to them, if you are under the age of 50 and you have at least a 10-year time horizon, I don't want to hear you talking about a recession. Because every data point, every study, everything tells us that it is much more likely, and the probability is on your side, that stocks are going to be higher 10 years from now than they are today. So if you have a 10 plus year,
that's such a good point. That is such a good point.
Your time horizon, you should be trying to optimize your income, spend less than you make, take your excess cash and buy financial assets and hold them for long term. And so when you think about it from that perspective, it takes the fun out of it because now you don't get the intellectual stimulation of like, oh, am I going to time the market? But if you are the type of person who is just going to keep buying and you're just dollar cost averaging into these assets, then spending your time trying to time when is the next recession coming actually has zero impact on your financial portfolio. You're much better off buying every top, every bottom, and everything in between for the next 10 years because it's only going to keep compounding over time. And time in the market is more important than timing the market. It's just that that's not fun to talk about, right? Yeah. Nobody wants to hear, it doesn't matter. Everyone wants to hear, oh my God, tomorrow I think that the market's going to crash and here's all the data as to why. But it really just comes down to what is your time horizon? If you got a long time horizon, you're a young person, it literally doesn't matter what happens between here and 10, 15 years from now.
I think something else, to your point, no one wants to talk about is how a recession is a buying opportunity. Like no one wants to talk about stocks going on sale and capitalizing on that sale when the economy is going down. Something I wanted to ask you about was, so we already went over asset prices are going very high in the last year, but economic data is weakening, if not already weaker than we think it is. How do you think either an economist or even policymakers, how should they balance decision-making or how they talk about the economy and assets when you sort of have these two diverging narratives? Your portfolio could be very strong, but maybe your personal finances are suffering, or you feel like things are too expensive for you and maybe you can't get a job. Those two things are very hard to square, I think. So what would you say there?
Today's episode is
not, no affiliation.
Inflation be higher than they're normally used to. You're going to see things like food prices, et cetera, remain elevated. You're going to see all sorts of psychological scars from living through that 9+% inflation. And so business owners are going to be very sensitive and quick to raise prices. Consumers are going to always be nervous whenever they see price movements. There's a lot of ramifications of all that stuff. And so from a personal finance standpoint, it's only going to feel more and more like you can't get ahead. At the same time, those who hold financial assets are going to continue to get rich because all of the things that are driving that personal finance kind of pain are driving asset prices higher as well. Inflation being kind of the biggest example. And so inflation is ravaging your purchasing power. And if your wages aren't growing faster than the inflation, you are literally falling behind. You're making less and less money. And goods are rising at such a fast pace, you can't keep up. But what benefits from the inflation is the financial assets. And so that's where you get this massive wealth inequality gap, and widening in that gap is that there is literally two different experiences in kind of the American society. There are people who have assets who are getting rich. Interest rates are at over 5%, but the stock market is at or near all-time highs. Bitcoin is at or near all-time highs, right? Real estate has continued to go up in many markets. Well, that is because the things that are driving these asset prices, mainly inflation, are the same reasons why they've jacked up interest rates. They're watching people kind of suffer, on a day-to-day basis from a personal finance standpoint. And so if you look at that trend, literally the intelligence test of financial markets for the next 20 years. Do you own financial assets or do you own cash? And if you own cash or cash equivalents, you are going to lose. And people, one of the things I constantly go back and point to is bonds historically have made up a massive portion, a double-digit percentage of a 60-40 portfolio. Yet bonds are a guaranteed way to lose money. If you look at TLT and many other bond funds, they're down. At one point, TLT, I don't know what it is recently, but maybe in the last couple of weeks, TLT was down like 25% over the last 5 years. You got smoked holding these bonds. And so if you follow the cash and cash equivalent style of investing, you are holding a melting ice cube. If you buy financial assets, investment assets, you benefit from the melting ice cube. And so it's like, kind of this crazy complex economic and financial market analysis literally boils down to one question. Do you have financial assets that are investments, or do you hold cash and cash equivalents? And the craziest part to me is that really, really, really smart people are just looking through their old lens and they're holding bonds. And they're like, look, I'm getting 5% right now. If you're getting 5% right now, you're probably not getting ahead. Yes, inflation is officially 3%. I see a lot of things going up more than 3%. And so when you look at that, you say to yourself, maybe actually that 60-40 portfolio should be more like 90-10. And that is a conversation that I think self-directed investors have started to have, but financial advisors, academia, kind of the theoretical white paper world, they're not yet ready to kind of breach that because it suggests that a lot of the analysis they've done historically is no longer relevant, which, isn't necessarily their fault, right? The world changed. But it definitely begs, for a different strategy. So it's tough, but I don't know. What are you seeing or what are you hearing from people as you talk to them?
Stocks are, the best wealth generating mechanism that we have. And, that's the same thing I've been hearing for the last several years, interviewing strategists and bankers and all that. And I would agree too. I mean, there's no, you could say crypto maybe, but if you're not into crypto, the stock market is the best way to probably grow your wealth. And if you have a multi-decade time horizon, you won't out earn the stock market, most likely, like with a salary or a job. I think everything you're saying is pretty spot on.
Is there anything else that you're paying attention to right now in the market, or data points or things that you've heard that you're like, oh, I didn't think about that being something to kind of pay attention to?
Yeah, I mean, the biggest thing that I'll be reporting on this week and that I've been sort of preparing for will be Jerome Powell's speech in Jackson Hole. That's definitely, everyone will be watching whether he gives any signal on 25 basis points or 50 basis points for a September cut. And that's really dominating the market this week, I think. And I think Friday will be a pretty big day.
Do you think that he will confirm 25 basis points?
Historically, Powell tends to say a lot of nothing. Every time he speaks, I feel like he just says the same thing he said last time, and then he'll always say, I don't want to give any signals about the next whatever it is. So we'll probably see more of that. And yet you will see everyone in the financial press predicting that he will say something about the size of the rate cut. I don't think he will.
I don't think he will either. I think the best people have to kind of wish for is that he just insinuates there will be a rate cut. But let's see what he says.
Yep. Thank you so much for having me.
Absolutely.
This was a while ago, right? This 5 days ago, so he already spoke since then. All right, moving on. The largest crypto super cycle in history just got bigger. This is the last thing we're going to watch today. This is about 14 hours ago. Altcoin Daily put a whole bunch of clips together. Let's do it.
So nearly half of all the corporate money being pumped into this year's election is coming from the crypto industry, according to a new report from the nonprofit watchdog group Public Citizen.
This is insane. New data has just come out showing that the crypto industry is outspending big oil, the big banks, and the Koch brothers, pumping money into this year's election. This is on both sides, and these are from companies you've heard of.
Now, the sector, which has been under high scrutiny by the Biden administration, is outspending big oil and banks this cycle, with Koch Industries in a distant second place in terms of corporate contributions. Heavyweights like Coinbase, Ripple, and VC firm Andreessen Horowitz which has a sizable crypto book, have collectively given more than $146 million with the goal of trying to get candidates who are friendly to the industry into office. Now, most of that corporate money being raised is going to the popular and bipartisan pro-crypto super PAC called Fairshake, which is one of the top spending PACs this year. I spoke to their team last night to get the latest numbers on the 4 largest donors to Fairshake and its associated PACs. Coinbase has contributed $49 million. A16Z and Ripple have both given $47 million each, and Jump Crypto put in $15 million.
And keep in mind, this money is not just going to one side and not the other. Probably a little more has been donated to Trump from the crypto community, but this is not just for presidential
Too comfortable holding that.
candidates, it's for senators, it's for congressmen, and this is going to both sides.
Now, as for where all that money is going, a filing with the Federal Election Commission this week showed that in July, Fairshake dispersed almost $75 million and still has nearly $120 million left to deploy, with 73 days to go until the November election. The Super PAC has pledged $25 million from that pool of cash to 18 House candidates in the general election to be split among 9 Democrats and 9 Republicans. It's committed another $18 million to 3 Senate races, Joe.
The Bitcoin super cycle has begun. Click the like button if you believe. And before we get to altcoin news,
Now, this goes back to the very ethos of Telegram itself, which does not believe in censorship.
this potential super cycle is much bigger than political donations. Nice visual of the US Bitcoin ETF flows. We've actually just seen the biggest Bitcoin ETF inflows in the last 3 weeks, meaning when Bitcoin dipped, arguably the most interesting monthly candle in Bitcoin's history, showing this dip was bought up so aggressively, so quick, and I think we understand why.
It's easy for people to buy it, and it can get stored on their brokerage account. There's a QSIP number, and as you know, because you and I have been on Wall Street a long time, this is my 35th year on Wall Street. Wall Street is a selling machine, and they haven't even amped up that selling machine yet. But just imagine tens of thousands of FAs and RIAs out there explaining to people that they need a position like this in their portfolio. So it's coming.
And Wall Street.
Big people that are into, stocks and stuff, they like to see the history, right? That since the ETF has been put out there, at least in my opinion, a lot of people aren't going to, some people will jump right on it, but a lot of people aren't just going to flood into it, right? They want to see some sort of history, and this thing's held up over time, over the past year. And then financial advisors, in my opinion, are going to probably push this thing a bit more, which is just going to drive the price of Bitcoin up and up. That's really it.
Street investor, political insider Anthony Scaramucci does a great job in explaining why Bitcoin today in the low $60,000 is most likely going much higher.
And so the regulatory clearance for the ETF made it safe to go into Bitcoin for lots of institutional investors, and even places like Morgan Stanley are now allowing their financial advisors to solicit people on Bitcoin. And so we had BlackRock executives out here talking about this phenomenon. They got $23 billion. It's the most successful ETF launch in history. So that's paving the way and making it more acceptable. So I think it's been very meaningful. If you had said to me last year when Bitcoin was in the 30s that we'd be here in the 60s post-halving, I think most people in the industry would be very happy.
And buying Bitcoin today is an easy 10x on your money, says billionaire Michael Saylor.
The best idea, if you want to make 10x your money, is you buy something that everybody in the world needs, nobody in the world can stop, and almost nobody understands.
Much like buying Amazon stock or Google stock back in 2010.
Dude, seriously, that's so true.
Okay, so in 2010, that was Amazon, or that was Apple, or that was Facebook or Google. These are all dominant digital networks that everybody in the world needed, that nobody could stop. But if you'd ask the typical mainstream investor, is this a good investment? They would all say, oh, it's very scary, it's overvalued, Amazon doesn't make money, mobile phones used to cost $50. It's like Apple's going to sell an iPhone for $600. They said it's too expensive. The iPhone $600 is too expensive. Nokia will sell me one for $30. They said Apple's going to go to $30. And of course, what happened is Apple went to $1,500.
Yes.
And so the conventional wisdom was against these big tech companies.
And breaking news for Telegram, as well as their altcoin
Michael Saylor's so on point, though, with everything. And this whole thing's so stupid.
Telegram founder Pavel Durov, arrested in France, now facing 20 years for refusing to censor his platform.
He has been detained.
Could you imagine doing 20 years because you don't want to censor your platform? That's insane.
By the office, which is, quote, preventing violence against minors, who had previously issued an arrest warrant for Durov in a preliminary investigation, quote, into alleged offenses.
Minors, not minors, okay? I don't know. Does anybody know? Is there any facts about that? Or is that just like a buzz thing they're throwing in there to make him look like totally disheveled?
Including fraud, drug trafficking, cyberbullying, organized crime, promotion of terrorism. He is accused of failing to take action to curb the criminal use of his platform. The investigators said, quote, enough of Telegram's impunity, adding that they were surprised that he came to Paris knowing that he is a wanted man. Now, this goes back to the very ethos of Telegram itself, which does not believe in censorship.
Now, Toncoin dropped almost 20% on the news, as well as Toncoin ecosystem coins, like Notcoin, selling off as well. Now, does the founder of the platform deserve to be charged for crimes that he did not commit, yet were committed on his platform?
Yeah, so that's kind of that's such a weird thing. Like, how do you, this guy, like, he has a platform, yeah, but like, for things that are being said by other people, like, you're gonna do 20 years in jail? That's absurd.
To me, I don't condone criminal activity. I think those criminals do deserve to be punished, but it does seem these single points of failure, like a CEO who's not even the CEO of Toncoin, just Telegram, they'll always be dragged in if your platform gets big enough.
What is the regulator?
It's like, it's so crazy. So Tane said there's probably some pedo stuff happening on Telegram. They should at least report known illegal activity. Yeah, and I mean, I agree 100%. They should absolutely report things. But dude, there is like the worst shit everywhere. Like even a kid's game, like what is it? It was Minecraft, I think, or maybe Roblox. One of those had like awful shit, and like it's not okay. It's not okay on a lot of platforms what people do or say or whatever. And yeah, all those people should be held accountable. But the whole free speech thing, like that shouldn't be. I don't know. This guy, I don't know. I don't think he should be in jail for 20 years over somebody else saying shit. Like, no, go after that guy. Find him, get his info, and go after him.
What do the regulators do in response to a system that cannot be regulated? They regulate the bits they can. They regulate the exchanges. They regulate the bank accounts. They regulate the national currency side of things. They shut down the on-ramps and off-ramps. They say, we will not let you take your money with you.
That's it.
And what do millennials say to that? Dude, I don't have any fucking money. All I have is my creative potential, my spirit, my productivity, and I can sell that directly for Bitcoin without an exchange, without an on-ramp, without an off-ramp. And when I need to buy something, I'll use my digital currency directly without re-entering your system to which I was never invited. Shut down the on-ramps, shut down the off-ramps, and I will stay on board. I will stay digital. I won't touch your gilded cage anymore because I don't need you.
Now, obviously, that's
actually a really good point. That's crazy.
Andreas Antonopoulos speaking about Bitcoin, how you can't censor the underlying protocol, but you could come after and regulate the bits, the centralized aspects of the ecosystem. Will the Telegram CEO need to step down and maybe turn Telegram's leadership into a DAO? Also, this is interesting.
No, I feel that's a shill. That's an absolute shill. My kid almost just knocked over my light. Real quick, Mining King said, listen, the rich do not like crypto because it can create wealth, which is exactly what they don't want. They want us to stay poor, and that's very, very true. But yeah, King, on the whole Telegram guy, getting arrested, right? It says, you said, that's like someone borrowing my car and going to the store and murdering somebody, and I get charged for the murder for being a friend. Yeah, that's literally what it is.
Down below.
That's
and
insane.
News for AI altcoin Chain GPT. Start a junior robot and
that's another shill. All right, we're gonna stop there. I got these kids, and they're killing me anyways. Oh, I never changed this to videos. My bad. All right, we're gonna recap some things now. Just kind of, if anybody's just joining, I know you're probably not, but the market, $62,391 for Bitcoin. We got Ethereum at $26.17. Solana's at $155. We got XRP at 59 cents. We have ADA at 36 cents. LTC at $63. We have Caspa at 16.8, so almost 17 cents. ETC just under $20 and 19.3. We have Near Protocol over here at $4.70. I actually got some at like $3.90 the other day, so that was a pretty decent buy, I guess. I think Near is going to do decent. We have Doge 10.5 cents or so. BNB $556. Ton coins at $5.48. We have, let's see, Crypto Bubbles. Anything changed? Not really. Biggest loser seems to be this Popcat one. These meme coins are slowly dying, but I mean their market cap is still freaking insane. I think on hopes that it still rockets, right? I mean that's why I still hold Shiba. I ain't gonna lie. One day, hopefully one day. Where the hell is Shiba? Oh, right here. 2.9% down. Need this shit to pump. It's got an $8.47 billion market cap. It's freaking insane. Flashbang, Fear and Greed Index at a 48 in neutral. Again, it was greed yesterday, fear last week. We want the needle to be pumping right between here. We want it to be right in the middle. All the way up to the election, in my opinion. I mean, yeah, slowly into the green there, right? But this is what we want. Exactly what we want. This project, I need to look into it. I don't know anything about Xano. Somebody said Mind Your Biz made a video, actually. I'm gonna check that out. Yeah, that's pretty much it, guys. That's really it. Hopefully you guys have a great, happy, and safe Tuesday. We're gonna be getting out of here. I got the kids. They're driving me nuts, as you guys know. Hopefully you guys have a great day. I'll catch you guys bright and early tomorrow morning, hopefully around 8:30 Eastern Standard Time, depending. Maybe I'll try to go a little bit earlier, but the kids start school in like week and a half, or my daughter does anyway, so I'll still have my son, so driving her to school, and then I got to figure out the whole time frame. Hopefully it doesn't change much, but it's probably going to be back to like 9:30 Eastern Standard Time. Anyways, guys, have a good day. I will catch you on the next one. Peace out. Oh, and don't forget,
if she don't hawk to her, we don't talk to her.
Perfect.